After 5 years of trading, I finally understood that all you need to be successful is just one candlestick. The ability for you to be able to read one candlestick is going to determine your future in trading. Now, in this particular video, I'm going to show you the power of one candlestick and what it can be able to produce for you every trading days. Now, you can see from my chart, this is EURUSD, and this is the clean 1:4 risk to reward ratio. How was I able to get this particular setup? I'm going to explain it to you in this particular video. And as usual, welcome to my YouTube channel. If you're new to this YouTube channel, I'm OLUWA-POUNDS. I used to drop powerful content steady. Now, don't forget to like and subscribe, and don't forget to bring out your pen, your biro, your book, and so many other learning materials, because you are going to learn a lot from today's video. Trust me, you're going to learn a lot. So let's continue. This is EURUSD. This is the clean 1:4 short ratio. How was I able to cut this particular movement? How? Let me do a chart breakdown. But before then, you need to understand something. The candlestick we'll be using is the 4-hour candlestick, and we have 3 time frame scenario under this particular 4-hour candlestick. Now, first of all, when I mean time frame, I do not mean 15-minute time frame, 4-hour time frame, or daily time frame. I'm talking about the 2 a.m. candle formation, the 7 a.m. candle formation, and the 11 a.m. candle formation. If you're trading ICT, you will understand what I mean by the 2 a.m. candle formation and this is our first candle. This will be our 2 a.m. candle formation. This will be our 7 a.m. candle formation, and this also will be our 9 a.m. candle formation. Something like this. Yeah. Now, if you're also trading London Q zone, you understand that we have the Asia section, London section, and New York section. Where did I just press? And the New York section. Now, if you can see this particular thing, you can also call this accumulation, manipulation, and distribution, AMD. I taught you guys about the power of 3. You understand? This is the power of 3 here. So, but our focus will be in this CRT formation scenario. That's where our focus will be. Now, this is our 2 a.m. candlestick. This is our 7 a.m. candlestick, and this is our 11 a.m. candlestick. Now, the 2 a.m. candlestick forms the range, while the 7 a.m. candlestick causes the liquidity sweep or the trap, and the 9 a.m. candlestick is now the expansion. After the sweep, we are going to start moving in the right direction in which price is meant to go before. But it first of all take out some sell side liquidity and sweep liquidity, or hit some people's stop loss that is going to fuel it, and boom, to the upside. What is liquidity? I've taught you guys about liquidity. Liquidity simply means money. Where there is money, that is liquidity. Anywhere there's liquidity, there is money. You understand? And price seeks for money. Price moves only where there's liquidity. Forget your block of your FVG, forget your block of structure, forget your order block, forget everything you want to forget. Once there's no liquidity around that particular area, that order block is invalid. When there's no liquidity around that FVG, that order block is what? Invalid. In fact, near your entry point, if in your entry point there is no liquidity, then it is invalid. As simple as that. If there's no liquidity in your entry point, what is it? That is invalid. Look at this entry. Just look at this entry now. If there's no liquidity here, this entry here now you can see now is invalid. But now show me, where is the liquidity? This is the liquidity. This 1 2. What is this? You guys should talk. What is this? This is called double bottom, or we'll say equal lows. This is equal lows. This and this is our equal lows. And equal lows is part of what we said as our liquidity area. We have daily high, daily low, equal low, equal high, double bottom, double low, drawing liquidity, and so many other stuff. You understand? So this is part of our equal lows. Liquidity reside below there. So any setup without liquidity near your entry, that particular setup is what? Invalid. Do you understand? So now, as we say, liquidity is money. This candlestick is going to cost the range. This particular candlestick is going to cost the particular sweep. If there's no liquidity sweep near your setup, then you are the liquidity sweep. Now, this particular man is the expansion. That is what happened over here. You can understand. So let's go to our 4-hour time frame and see for yourself. The 4-hour time frame we are going to be using is our 2 a.m. candlestick and the rest. So this is our 4-hour time frame. This is a 2 a.m. candlestick time frame. This is a 10 p.m. candlestick time frame. And you can see this is our sweep of liquidity. This is the candlestick here. Let's take this out. This is the high and the low of this particular 4-hour opening candlestick. And again, you can also see this new week opening gap as our FVG confluence. The price is gonna buy to that upside. You understand? This is a new week opening gap. And apart from that, price eventually, first of all, seek for the sell side liquidity before going bullish way. If price wants to go bearish way, price will go to, first of all, seek for the bearish liquidity before going that bullish way. If price wants to go for a bearish way, price is going to, first of all, seek for the bullish liquidity before doing what? Going down in a bearish way. You understand? Liquidity first before any other thing. This same setup is what is forming over here. You can see this is the 9 p.m. candlestick. This is the 1 a.m. candlestick. This is the range. This is the liquidity sweep. And this is what? This is the expansion. You understand? Into what? Into a fair value gap that was over here. But this expansion already completed because of this fair value gap that's over here. You understand? Now let's talk about this particular entry that we took. Okay, so after seeing this particular sweep of high and sweep of low, what next? That is when we're going to apply our model 1 confirmation entry. As I said about model 1 confirmation entry, that particular candlestick that causes the sweep, that is what we're going to mark the eye of it as our entry. Now this is the candlestick here that causes this particular sweep. Then the eye of this candlestick is what I'm going to mark out as our entry, if only any candlestick closes above it. Now this particular bullish candlestick does what? It closes above it, making this particular model 1 entry valid. And again, we also have more confluences, liquidity confluences. Look at it here. These two equal lows can also serve as our liquidity confluences. Now you can see all these confluences and all these setup joined together to be able to form an A+ setup that was able to distribute at least 1:4 risk to reward ratio. Price did what? Tapped us in here and boom, start spiking to the upside till up to this nearest draw in liquidity. I've been teaching you guys about drawing liquidity since. I have the PDF of drawing liquidity. I also have the PDF in SMC, Smart Money Concept. I have all those PDF. I also have the PDF of candle range theory. If you need all this PDF, contact me on Telegram or contact me on WhatsApp. But don't forget, all these PDF are not just for dash. Do you understand? Okay, so now, as easy as that, this was how we were able to catch this particular clean setup. You can also apply this in your daily trading and you are going to be profitable. This particular setup is 100% real and 100% sure. But as they always said, no setup is 100% no setup has an 100% win rate. You understand? So I'll give it particular setup at least 80% win rate. which means if you are trading, if you have already traded it 100 times, you're going to win 80% of all the times, 80 times of all the times, and you're going to lose only 20 times of all the times. Do you understand? This is called candle rate theory. I've now gone deep into that because I don't know if you guys are going to like watching that from my channel or from other people's channels. You understand? So, but if you want me to go down and deep into candle rate theory, how it works, everything about it, then I'm here to serve you guys. Okay, don't forget to join my Telegram channel for clean setup like this, so that me and you can be able to do what, can be able to grow together. The journey is to be a profitable trader, and not to be jealous about other profitable traders. Risk management is key here. Okay guys, risk management is key. Focus on your risks. Why are you entering a trade? Focus on that before entering any trade. Do you understand? Okay guys, see you guys next time.